The S&P 500. You've heard of it. You've probably even invested in it. But what exactly is it? Where did it come from? And more importantly, where is it going? In this video, we're breaking down the S&P 500, its history, how it works, what it represents, and what the future may hold for the world's most watched stock market index. Whether you're a beginner investor or a seasoned pro, this is the full breakdown you've been waiting for. Let's get started. The S&P 500 stands for the Standard & Poor's 500 Index. It's a stock market index that tracks the performance of 500 of the largest publicly traded companies in the United States. But it's more than just a list. It's a market cap weighted index, meaning larger companies have more influence on its performance. Today, it includes tech giants like Apple, Microsoft, Amazon, and Nvidia, but also companies in energy, healthcare, consumer goods, and more. The S&P 500 covers about 80% of the total US stock market capitalization, making it one of the most accurate reflections of the American economy. It's also the benchmark most investors use to measure performance. If your investments beat the S&P, you're doing well. If not, it might be time to reassess. The roots of the S&P 500 go back nearly a century. In 1923, Standard & Poor's began tracking a small group of US stocks. That list grew to 90, and then, in 1957, the modern S&P 500 was officially launched, with 500 companies and real-time calculations powered by early computing technology. Since then, it's weathered some of the most dramatic economic events in history. From the oil crisis of the 1970s, to Black Monday in 1987, to the dot-com crash in the early 2000s, the Great Recession of 2008, and the COVID-19 market crash in 2020, the S&P 500 has been through it all. Despite volatility, the index has delivered an average annual return of around 10% over the long term. Those who held on through the chaos were often rewarded. Time in the market beats timing the market. So, how is it calculated? The S&P 500 is market cap weighted, meaning companies with higher market value carry more weight. If Apple is worth $3 trillion and another company is worth $30 billion, Apple will move the index 100 times more. A committee, not an algorithm, decides which companies get in. To qualify, a company must be US-based, publicly traded, have positive earnings, and meet size and liquidity requirements. Companies are added and removed regularly, depending on their performance and relevance. But why does it matter so much? Because the S&P 500 acts as the heartbeat of the American economy. It reflects corporate America's highs and lows. It also powers millions of retirement portfolios. Whether through 401ks, IRAs, mutual funds, or ETFs like SPY, VOO, or IVV, investors big and small rely on it. It's simple, diversified, and historically reliable. For many, it's the foundation of long-term wealth building. Now, in 2025, the S&P 500 is making headlines again. It's hovering near record highs, largely driven by big tech and the rise of artificial intelligence. Nvidia, Microsoft, Amazon, and Meta are leading the charge, and the top 10 stocks now make up over 30% of the entire index. That's a level of concentration that some analysts are beginning to worry about. Traditional sectors like energy and industrials now play a much smaller role. While this tech dominance has delivered strong returns, it also creates risk if just a few companies stumble. There are other criticisms too. The S&P 500 is entirely US-focused, so investors miss out on international growth. It's also heavily tilted toward large-cap companies, which means mid- and small-cap innovators are left out. And because it's passive, it can't react to economic warning signs. It simply reflects the market as it is, the good, the bad, and the irrational. Still, for all its flaws, the S&P 500 continues to be one of the best tools available for broad exposure to the US market. And its future, that depends on innovation, regulation, and how well America's biggest companies adapt to changing times. Artificial intelligence, green energy, digital finance, all are shaping the economy of tomorrow. Some believe the index will evolve, maybe adding more private companies or even crypto-related assets. Others believe the classic formula will hold steady, driven by long-term investor confidence. Whatever happens, one thing is clear, the S&P 500 is more than just a number. It's a mirror of American business, a reflection of its past, and a window into its future. If you found this video helpful, make sure to like, subscribe, and check out our other finance breakdowns. We post twice a week, giving you the tools and insight to invest smarter, not harder. Thanks for watching, and we'll see you in the next one.